All right, this presentation is on the national income accounting, which is also known as gross domestic product. So your learning target is that you should be able to explain what GDP is as an economic indicator. We have some focus questions. What is GDP? Why are only final goods and services computed in GDP? Final goods are a type of good. There's also like intermediate, things like that. Final goods are goods that are ready to be sold. What is omitted from GDP? So anything that's not final. Also illegal goods. We'll talk about that in a minute. And then what's the difference between gross domestic product and GNP, which is gross national product? We have two key terms, gross domestic product and double counting. Double counting is why we only count finished goods, because if we counted intermediate goods and then later when they're finished, we would be counting them twice, and that would mean that the total sum of our gross domestic product would be inflated, and that's not good. All right, so what is gross domestic product? Well, it's the total market value of all final goods and services that are produced in one calendar year in a country. And gross domestic product, it's determined by multiplying the price of each of the final goods by the quantity that were produced. So if you've got something that the price is $1 and you've created 200 of them, 1 times 200 equals your GDP is $200. It's that simple, price times quantity. So if you look at the numbers, right, the United States is 24.32% of the global economy in terms of its gross domestic product. If you take all of the GDPs of all of the countries in the world and you add them up, right, the United States counts for almost a quarter of it. That's a lot, because the United States, in terms of population, is significantly under 25% of the population. Okay, China has over a billion people, and they're at 14.84%. So I want something, this is something I want you guys to understand. You'll often hear, for political reasons, people talking about how China is going to overtake the United States. It will, definitely, one day. There's no question. Economies rise and fall. But this is a 10% difference, or nearly. That is not something that you can just easily make up in like even a couple of years. I mean, it could take decades, all right? And this is just the economy. This isn't including things like your ability to feed or house or care for your people, all these other things. So the global economy, and this is a couple of years old. I believe this is 2 years ago. Everything that was made in the world combined equaled $74 trillion, okay? The United States, our economy is about $19 trillion per year. So it's, a lot. So here's the United States in terms of GDP. So it's 19 trillion. It's in billions of dollars, but it's 19 trillion, $391 billion. China's at 12. Okay. Then there's Japan. I mean, that is a huge difference, you guys. Huge. And it just goes down and down and down and down. And this is from 2017. Now this is the gap. All right. The gap is, what is it that we sell and what is it that we buy? So we have a net surplus of $1 billion in trade with Canada. So Canadians buy $1 billion more stuff from us than we buy from them. Where China, we buy $379 billion more stuff from the Chinese than they buy from us. This is what's called imbalance. However, it is not a zero-sum game, meaning just because this number is in red, and meaning we're buying more, that doesn't mean that we're losing, okay? I gave this example before, but we can't grow bananas in the United States. So it would be really foolish, really costly to grow bananas inside of greenhouses in the United States, right? It's better for Guatemala, Honduras, whatever, to grow bananas and then sell them to the United States. We give them our dollars, and then they use those dollars to buy things. That makes more sense. Now, some people, including our current president, they think that because the Chinese are selling more things to the United States than buying, that the United States consumers and manufacturers are being, in his words, screwed over. That's not the case. That's not how that works. Now, this isn't a perfect system. Should the Chinese maybe be buying more? Is there problems with currency manipulation? Yes. It's not a simple answer, but I just want you guys to understand that a gap in trade is not necessarily a bad thing. So why count only final goods? Well, intermediate goods, like I said, these are going to be used in the finished product, and so you don't want to count a partially assembled or partially finished product in your goods, because if you do that, you'll double count them. So That's bad. So the example I think in the work is that if Goodyear sells tires to GM, is that included in final goods? And the answer is no. The car is counted when it's completely done, um, because those tires can't be counted as part of the economy if they're also part of the car. Now, if you and I just go buy our new tires at at Bell Tire, that's considered to be a finished product, so they count there. So it's a little strange. It's not really strange, but some items like tires, if they're if they're going to go on a car at GM, Ford, Chrysler, wherever, those aren't counted until the car is completely rolled off the assembly line. If you buy them at like Bell Tire, Walmart, wherever it is you buy your car tires, those count because that's a finished product. It's different, okay? And again, you don't want to count things twice because it would inflate the GDP numbers, and you don't want that. So, what does GDP leave out? Well, first thing is it leaves out anything that's illegal. So, like, you've got illegal things up here, like these aren't real Beats, these are not real Rolex, stuff like that, or Invictus watches, not real diamonds, and drugs. You don't you don't include drugs, okay, because they're illegal. Any transaction that doesn't have a receipt, and I don't mean that the receipt was given to you and you lost it. I mean, like, there was no receipt for it. So, like, for example, if I have somebody cut my hair that's a friend of mine, instead of going to a salon, well, that's not part of that's not counted towards gross domestic product. If you pay in cash and there's no sales receipt, those aren't recorded. Lots of people do this. Like if you go on Craigslist and things like that, and you buy something and the person pays you in cash or you pay in cash, typically you don't get receipts for those. Okay, doesn't mean it's illegal, but it's not part of it's not included in the gross domestic product. Other things that are done that are traded outside of official markets, so like this is like a swap or a garage sale, that sort of thing, those aren't counted as part of gross domestic product. For one thing, these aren't finished products. These are products that have already been counted in gross domestic product at one point in the past, and you're just selling them again. Okay, and it's GDP is things that were made this year, not things that were made in like 1960. Used goods, they're all not counted. Stock transactions and other financial transactions are also not included in GDP. Okay, so anything that happens on the Dow, the S&P, NASDAQ, and there's a lot of money that's being that's going back and forth. That's not included. And then the other thing is anything that is a government payment that is not an exchange for good or service. So like if the government is buying a tank, right, or is building a school or a hospital, that is included in gross domestic product. However, if your grandparents or parents or whoever are getting a Social Security check, that is not included in GDP. And the reason why is you and I pay into Social Security. The government holds on to that money. And then once you reach what's called an eligible age, so for men it's 65 and women it's 67, then they give you your money back in a set amount, right? So that's just the government giving you back the money that was yours already. So it's not the same thing as the government like buying a tank or buying land or whatever, okay? This is different. This is your money when it comes to Social Security. It's the government's money when they buy tanks, things like that. So this is a short example, like of everything we just talked about. Here's the list of the items. Here's an example of the items if you're unclear. Now, what's the difference between gross domestic product and gross national product? Well, you can read this up here if you'd like, but this makes more sense. So gross national product is the total market value of all final goods and services that are produced by U.S. citizens, no matter where those citizens are. Because corporations are multinational. So I could work for Coca-Cola in India. I could work for Ford in Germany. So I'm an American citizen. So GNP includes the market value of what I create, no matter where I create it, because I am a U.S. citizen. Okay. Gross domestic product, though, is the total market value of final goods and services that are produced within the borders of the United States by either citizens of this country or by non-citizens, as long as they're here. Okay. And if you think about this, right, Volkswagen has car factories in the United States. So does Honda. The people that are working on the assembly line, most of the people that are working in management, they're Americans. But there are people from Japan here or from Germany, engineers and such, These people, they would not be included in our GDP because they are not U.S. citizens. Okay? It's not that hard to understand. Just national means any place in the world. Domestic means inside of your country. It's that simple. All right. You should watch this video. It's very good. It explains what GDP is. And that's it. Okay? I'll make sure. Yep, that's it. It's from CNBC. I'm not going to play it because it makes these videos longer than they need to be. All right. Thanks, guys.